Price Cycles, Part 2. This is a follow-up to my video on support and resistance price cycles. When I made the first price cycles video, I knew it would be controversial, and some wouldn't believe or would misunderstand the point I was trying to make. The point of my video was not to try and say amateurs can't see support or resistance lines, or that they cannot see ranges. The point of my video was to try and show that big money places their positions and uses their resources and influence to steer the public into the wrong direction. Trading is a zero-sum game. For someone to win, someone else has to lose. If you make money, someone else lost it. As small traders wash out and quit trading, big money must continually attract new traders and continually steer them the wrong way. Support and resistance comes in many forms. The graph I posted was an oversimplification to try and make a point. I will now try and give 3 examples that many may have followed in the media without realizing the manipulation involved. Alright, let's start with our long-term daily price chart of oil. Here's our support resistance line. When oil was up near $140 a barrel, all you heard in the media was oil is going to $200 a barrel. China will add 100 million new cars. India will add 100 million new cars. Can't build a refinery. On and on and on. Big money was shorting then. Everybody else was buying, expecting oil to go up. You heard gas is going to be $7 a gallon. We're going to run out. Peak oil. Right after that, because this was beginning of a recession and a depression, and big money knew this, the price began to fall all the way down to $38. Okay, when oil was $38 a barrel, all you heard in the media was oil is going to $25, demand is down, inventories are overflowing, we're in a recession, we're heading toward a depression. Big money was buying into this, everybody else was selling, expecting the price to come down. Right after this, oil proceeded to climb right back up to 80. Alright, let's move over to gold. Here is a long-term daily price of gold. Let's add a support and resistance line. Let's add another one and make a channel. When gold was peaking out at the top of the resistance line, all you heard in the media is gold is going to $2,000 an ounce. And you heard this over and over and over right before it dropped down to $800 an ounce. When gold was $800 an ounce, you heard in the media over and over again, gold is going to go down to $400 an ounce, right before it climbed right back up to $1,000. Here's another example of how the media manipulates the markets, and I'm focusing on a long-term daily chart of Bank of America. And what I want to do is focus on this area right in here, especially this long green spike. This was right after Washington Mutual and Wachovia got nationalized. And there was a big fear that all the banks would get nationalized. At the time, Bank of America was right up here in the 20s. Bloomberg brought out one analyst, economist, and expert after another, that said things like, well, if there's one bank that will pull through all of this, it's Bank of America. Really, they'll come out of this ahead because they'll pick up customers from the other banks that go out of business. Right now, the price is really cheap because Bank of America only dropped when the other banks fail. Anyone getting in now will pick up the stock cheap. I think it'll be over $60 next year. I mean, this isn't Bank of Next Door, it's Bank of America, one of the biggest banks in the world. They aren't going anywhere. I would say in a long-term portfolio, one would want to hold a company like Bank of America. On and on, expert after expert, day after day, saying the same thing until the truth came out and price dropped down to 3. While the analysts on TV were telling you it is a good time to buy Bank of America, big money was selling Bank of America and shorting the position very heavily. They need buyers when they sell to keep the price up. Otherwise, their selling strength will push the price down and they won't get a very good price for it. By drumming up story after story in the media to say it is a good time to buy this stock, they got buying strength to offset their selling strength. I could give many, many more examples, but it would probably be pointless. Some will never believe this anyways. So I'll simply suggest to those watching this that they be aware that when markets move, often they are being pushed.